Brent Crude hit its highest in 3 weeks as investors weighed a fresh round of US sanctions on Iran, a drop in US crude stocks, and a softer tone from the president towards not just the Fed chair, but China as well. Well, Homayoun Falakshahi is senior oil analyst at Kpler. So, Homayoun, do you believe oil prices, which are down around 10% this year so far, are on their way up now?
There is some upside looking at the next 2-3 months. We're getting close to the summer season, which is usually peak demand season in the northern hemisphere. So looking at supply and demand fundamentals, the next 2-3 months should see a tightening of that. We are seeing peak maintenance season across refineries in Asia. Peak right now. In the next few weeks, really in May. But after May, they would come back strong, and product cracks look relatively healthy, I would say. So the next 2-3 months, I think there's still some upside. But generally saying, the macroeconomic environment looks pretty weak, despite the fact that Donald Trump, backpedaled on a lot of, the tariff implementation. There's still a lot of uncertainty, which is going to hit investment from companies and the public sector as well. So all these, I think, are going to have an impact, and we don't really believe that prices have a strong way up to go. Unless there's a new situation in the Middle East, or potentially talks between the U.S. and Iran don't reach any result. But in the next 2-3 months, yes, I think we could be in a situation where we see Brent slightly go past above $70 per barrel, but not so much higher.
Now, Homayoun, I mentioned US crude stocks at the start of the show. I thought President Trump wanted oil drillers to keep drilling. So what's going on there?
It's one thing to say drill, baby, drill. On the other hand, if you have prices which are not high enough, that's not going to incentivize more activity in the upstream sector, more drilling. In fact, the recent drop in prices has actually led to some freezes when it comes to drilling programs. It's not impacting very short-term drilling because most of the equipment and staff is already being contracted. But when you look at drilling down the line, let's say 2-3 months from now, it certainly is going to have an impact. I think when you look at the U.S. Upstream sector, the break-even price on average is pretty much around $60-65 per barrel. And if you keep the tariffs on steel, it's even slightly higher than that, maybe $65-67 per barrel WTI. Certainly not, right now we're not in the price level that will incentivize a drilling program. I guess when it comes to Trump's policies, though, in the short term, it's better for him to have low prices. It's more important as a priority rather than to have U.S. companies continue investing. That could come later down the line, but I guess in the short term, that's not the priority.
Now, if economic growth is as weak this year as the IMF believe it will be, just 2.8%, what does that actually mean for fuel demand?
Yeah, it's going to be negative, have a negative impact. We also have downgraded our view of GDP forecast, GDP growth this year, especially for the US. We're actually more bearish than the IMF. We think the US growth is going to be less than 1%, 0.8%. We've also downgraded the Eurozone to under 1% as well, and most of the Asian economies. However, we think that China will still be able to reach its 5% GDP growth, even if tariffs stay in place. We think mainly because of a lot more stimulus packages to come. Obviously, when it comes to oil demand, this is negative. I mean, we have been even before Liberation Day, even before the tariff announcement, we were quite, I would say, more conservative on the side of oil demand. We saw products demand growth at around 800,000 barrels per day, but we have decreased that estimate to 640,000 barrels per day, mainly on light ends products being impacted.
Now, we spoke about Iran very briefly at the top of the show, but what's your analysis on whether or not they will limit supply?
Yeah, I think, the US strategy so far has been to increase pressure, maximum pressure to get maximum results out of the negotiations. However, those negotiations seem to be going pretty well. So we have increased our, the chance of a likelihood of a deal to about 50%. It's still 50-50 on that front. But at the same time, the fact that the US has put sanctions on direct buyers of Iranian oil is a big game changer, we think, when it comes to the sanctions, the tightening of sanctions, and it should start having an impact on production and export from the country. So, since Trump was elected, we were saying that it's going to take a few months for his administration to impact Iran's production and exported volumes. And so we still see our base case is still that we're going to be losing about 500,000 barrels per day from Iran by the summer. So it's about one third, a bit less of their full oil exports. Obviously, if there's a deal between now and then that view changes. But we think that we're still headed in that direction. We should still see lower Iranian supply between now and June, July, and that also will push Brent higher between now and the summer. At the same time that demand picks up in the northern hemisphere.
That was Homayoun Falakshahi from Kpler.